Welcome to Motley Fool Money. Thanks for being here. I'm your host, Chris Hill, and joining me in studio this week from Motley Fool One, Jason Moser, from Motley Fool Income Investor, James Early, and from $1 Million Portfolio, Mr. Charlie Travers. Good to see you guys.
Good to see you, Chris.
We've got the latest. What's that?
Insert crowd noise,
right? Exactly. Last week at American University, we had in front of a live audience. Yeah, we're back in the studio. We don't have the live audience. But we do have the latest numbers in retail. We've got the latest phone from Samsung and the latest payout from one big dividend stock. We're going to talk about the financial benefits of skipping work with retirement expert Robert Brokamp. And as always, we've got a few stocks on our radar. But just as last week, guys, we're going to begin with the market in general. This week, the Dow Index hit a record new high, had its longest winning streak since 1996. And Jason, despite the great run, you still got people out there who are saying either this is all about to end, it's a bubble, it's the dot-com bubble all over again, or you've got some people, and maybe the most prominent, Jim Cramer on CNBC, saying now is not the time to get into the market. If you're not in right now, stay out until the market drops. What do you think?
Yeah, given the last 5 years, excuse me, I can understand the trepidation there. I mean, it's not like we have seen just sort of a sort of normal market behavior here. And the rising tide has lifted a lot of boats here. The stock market is really where it's at. If you're looking for returns, that's the best place to go. I do think that there's still plenty of buying opportunities out there. I just think that we as investors have to be a bit more discriminating than before. But when you have reputable investors out there like Warren Buffett or Marks from Oak Tree Capital, they're still buying stocks. They're still calling stocks the best investments out there. I mean, they're not just paying us lip service. They're not just saying that. I mean, they mean it, and they're pretty smart guys as well. Again, I think we just have to look a little bit more closely, but still plenty of opportunities out there.
James, you agree with that?
Yeah, the fascinating thing about economics, about society, about investing is that we create our own reality. So if we have enough people on board with the idea that we're in a bull market, with the idea that the economy is going to uplift, it will. It will. It's sort of like everybody in a traffic jam stepping on the gas at the same time, sort of. I would not be surprised, though, if the stock market went sideways a little bit from here. That's why I'm a fan of dividend stocks. I mean, I say that because I write a dividend newsletter, but also because I believe dividend stocks will help in that kind of scenario, too.
Market timing with James Early.
Yeah, yeah, exactly. Charlie,
no, but I think we all agree that making these short-term predictions about the market is futile. It doesn't matter that the Dow's at an all-time high. It gives you no particular insight as to what it's going to do over the next few months. And I think all of us at the table here are business-focused investors. There's always stocks to buy, no matter what day or month you're in, and we all have stuff we like right now. And maybe stocks on our radar will tell you about a few of them.
We will get to that.
Marketer, I like it.
Yeah. We will get to that shortly, but I want to read an email we got from Brian Can in Atlanta, Georgia. He writes, I've been hearing some pushback from some media outlets that the Dow Index is not the greatest or even a good indicator of financial health. Just wanted to get your guys' take on this. Jason?
I mean, I agree with that totally. It's why we tend to look at the S&P 500 first and foremost. But if you look at the Dow today, the only original component remaining there is GE. But I mean, companies, whether it's Citigroup or Bank of America, Travelers Insurance is in there, that's fine. But it's not a very wide swath. It's not very representative of our overall economy. When you look at something like the S&P 500, it is much more so, and that's why we tend to look at it from that perspective.
Yeah, and mathematically, the Dow is what's called a price-weighted index, which I'll save you 45 minutes and just say Google that. The S&P is a market cap-weighted index, which is a little bit more representative of the reality of the market in terms of size.
So, Jason, just to wrap up, you talked about the need for investors at this time to be a little bit more selective. Where are some of the areas you're looking at as an investor? And it doesn't have to be specific companies, if there are industries that you're looking at to find value, because not everything is as cheap as it once was in the stock market, certainly in the last couple of years.
No, it's not. But I still think there are plenty of opportunities out there in energy in particular. I mean, I think that given our situation, the glut of supply of natural gas that we have, and the thoughts that we may become a natural gas exporter here over the coming years, I think there are plenty of opportunities out there in energy. And I also do believe there are opportunities in retail. You just have to be very, very picky. And I think look towards the greater trends in retail, for example, e-commerce. Look for those companies that are investing in their e-commerce operations. Nordstrom comes to mind. They're going to invest about $1 billion over the next 5 years. Look for the bigger trends. But all in all, that's how we mitigate that risk as investors, is keep on investing in the good times and the bad.
E-commerce, the internet may be big one day, you're saying.
The internet? Oh, yeah.
Thursday night in New York City, Samsung unveiled its new Galaxy S4 smartphone. Charlie, there were some new features, including the ability to translate 9 languages, smart scrolling, and eye tracking software, which seems kind of cool and also, for me anyway, mildly creepy. But
Yes,
what'd you think?
Some of the new features are a little dubious. They sound cool on paper, and then when you actually use the phone, they might not work that great. So we'll have to see when this actually goes live in the world how well some of these things like the air gesture swiping actually work. But I think, Samsung is the global leader in phone sales. Their Galaxy S3 is the best-selling Android phone. And I think launching it at this particular time, the successor device, is perfect because they have no high-profile competition fighting with them right now. And I think they're just going to sell tens of millions of units like they did with the S3 because of that. Might not sway any of the diehard iPhone users, but that's not necessarily what they need to do. They just need to keep growing the Android ecosystem, and they're going to be just fine in those in that consumer base.
Well, and as we were talking about before the show, the timing really is, whether they meant to or not, the timing of this event was brilliant because Apple's not going to have a new device launch anytime soon. We may be, 6 months at the earliest from something like that.
Yeah, that's completely right. And same on the Windows end. You're not going to see anything till later this year either. Not that that's a huge threat. So they've really got the new phone world all to themselves for at least a few months, and that's a great spot to be in.
Where do you put Apple in all of this at the moment? Because from a stock perspective, it's down more than 35% since last fall, and there are people who are just I guess when I look at Apple, and I'm not a shareholder, on the one hand, I see an innovative company, a great track record, and piles of cash on hand. But at the other end of the spectrum, you've got a lot of people with good reason saying, yeah, the cool kid on the block now is Samsung.
Samsung really pushes the envelope on the hardware capabilities. And I think it's important for Apple to not fall too far behind and be viewed as a second-tier caliber phone. I think when the new phone comes out later this year, they're just going to have to at least match. They don't have to. They're never the latest and greatest hardware. They combine that with the best user experience and ecosystem, but they can't be viewed as falling behind Samsung.
This week, the Federal Reserve conducted its annual stress tests of the major banks. 17 out of 18 passed. Ally Financial was the lone bank not to pass. James, a couple of things that stood out to me anyway. Citi had the top score. Pretty good when you consider that last year Citi barely passed. But now you have banks like Bank of America, Wells Fargo, JP Morgan Chase, saying that, hey, now that they've passed, they're going to put their capital to work. They're going to be buying back shares. They're going to be raising dividends. This seems, across the board, like a genuinely good thing. Yeah,
Chris, in a way, it was a triumph of the week. I mean, the banks that had formerly had some of the most problems seem to look the best here. Citigroup and Bank of America did pretty well. The Fed used the phrase conditional non-objection when it described Goldman and J.P. Morgan.
What does that mean?
It sounds like the kind of phrase a dad would use describing someone his daughter is dating, right? I mean, it's like, it's like a semi-rejection.
I
really.
Can't kill him, but
yeah. Conditionally non-object, and BB&T and Ally obviously got rejected more directly. I think though the Fed seems to be less concerned with loans, more concerned with derivatives in this overall scheme. It's still not enough to get me off the couch and make me want to invest in American banks, though.
I was just going to say that's where I was going to go with this, because it seems like, because I know that you more so than the other two guys at the table, dividends have a sway over you. But it seems like even with that, there's still the whole black box thing going on with most of these banks. I know we talk about Wells Fargo being a little bit more transparent in their dealings, but it just seems like for the other major investment banks, it's really hard to know what's going on.
And for dividends, Chris, for comparison, I think Bank of America and Citigroup are paying like a penny per quarter, something small like that. So we're still not anywhere near real dividend territory.
We're not in
anywhere.
James Early territory.
We are nowhere near James Early territory.
Coming up, GE gives shareholders 18 billion reasons to smile. Stay right here. You're listening to Motley Fool Money.